Q4FY20 earnings conference call of Biocon Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Saurabh Paliwal from Biocon Investor Relations. Thank you, and over to you, sir.
Thank you, Janice, and good evening, ladies and gentlemen. I welcome you to Biocon's fourth quarter and full year of fiscal 1920 earnings conference call. Before we proceed with this call, I would like to remind everyone that a replay of today's discussion will be available for the next few days, about an hour following the conclusion of this call. The call transcript will be made available on the website in the coming days. To get started, we have the company's management led by our chairperson, Dr. Kiran Mazumdar-Shaw, and other colleagues from the senior management team available here. I would like to take this opportunity to remind everyone about the safe harbor related to today's conference call. The discussion may be forward-looking in nature based on management's current beliefs and expectations. It must be viewed in conjunction with the risks that our business faces that could cause our future results, performance, or achievements to differ significantly from what is expressed or implied by such forward-looking statements. At the end of the call, if you need any further information or have any questions, please do get in touch with me. With this, I would like to turn the call over to Dr. Kiran Mazumdar. Over to you, ma'am.
Thank you, Saurabh, and good evening, everyone. I welcome you to Biocon's earnings call for the fourth quarter and full year for the fiscal 2019-20. As you can see, we are living through unprecedented times, and of course, I must say that this is a format which hasn't changed, whereas other formats of communication have. So I would like to make a couple of points upfront on the broad impact of COVID-19 on Biocon operations and how we have responded in terms of our preparation to sustain our operational performance amidst all this turmoil. First and foremost, in line with our commitment to provide a safe working environment to our employees, we significantly reduced the number of people in our facilities to only those who were required to carry out manufacturing and quality operations based on planned production schedules. All other employees either stayed back or were working remotely from home. And I would like to add that the work from home that was put into effect was done so very rapidly with all the sophistication that is required to operate from home on internet in a secure manner. I'm very proud of our employees and want to thank them for their efforts in rising to the challenge and responding positively to the situation. It has helped us maintain our critical manufacturing operations with reduced manpower while we continue to address the needs of medicines and services for patients, partners, and customers across the globe. In recent weeks, we have also added to this fleet of people operating at the workplace by getting many of our research workers back to the labs. Earlier this month, there was some easing prescribed by the central and state governments, and we have started to gradually scale up our operations with more employees reporting at site for work with required safety precautions to maintain a safe and infection-free environment. A substantial number of employees still continue to work remotely from home, and we are continually assessing the situation and look to normalize our operations to pre-lockdown levels by the end of this month. This is, of course, subject to the evolving COVID situation in the cities and areas we operate in as per government-mandated guidelines. I'm also very pleased to report that Biocon has played a very important role in coming out with workplace protocols along with various industry bodies. Secondly, the turmoil caused by the COVID-19 pandemic obviously has disrupted supply chains and impaired mobility due to the nationwide lockdown, and it did have a bearing on our manufacturing operations. we put into place business continuity plans to minimize this impact. We did experience delays in receiving and sending shipments, but that did not have a very big impact, though it did impact our biologics business, whilst the other businesses did not get the impact of this disruption. The logistics situation has now begun to rapidly improve after the relaxation provided by the government in early May, which allows for unhindered movement of goods vehicles across the country. We have also seen imports for raw materials gradually normalize, and outbound logistics have also now significantly improved. Having adequate inventory of key raw materials to sustain operations during the period of the lockdown has helped us tide over this challenging period, both for small molecules as well as biologics. We are adequately stocked with few months of inventory to carry out our critical manufacturing operations and are continuously evaluating our requirements to overcome another lockdown kind of situation. In small molecules, therefore, we have decided to discontinue manufacturing of certain products which were sourced from China and were not strategic. The impact of this discontinuation will be made up by repurposing the facilities towards manufacturing strategic products over the long run. Now coming to our performance. After 3 strong quarters, Biocon has reported a weak fourth quarter. 2 of our businesses, the small molecules and the research services segment, delivered actually very strong revenue growth amidst these unprecedented times. It was only the biologics segment that was extremely challenged during the quarter and reported a weak performance. Dr. Christian Hammerscher, CEO of Biocon Biologics, will elaborate further on the Q4 performance for the biologics segment later in the session. Thirdly, spending on medicines across the globe for non-COVID diseases has seen reprioritization with healthcare systems strained due to dealing with the pandemic. In that backdrop, there will be tremendous opportunity for volumes of generics and biosimilars to ramp up as the situation improves and spending returns. At Biocon, we are very well placed in both these areas and expect to come out stronger once things normalize. In the next quarter, that is Q1FY2021, we expect our financial performance to improve over Q4, with uptick expected from Q2 onwards. The US FDA approval for Semglee or insulin glargine is expected shortly. This will add to our current portfolio of biosimilars, which includes Fulphila, the pegfilgrastim, and Ogivri, trastuzumab, and create a growing portfolio of biosimilars for the Mylan partnership. On the regulatory front, our biologics facilities both in India and Malaysia have received positive EIRs from US FDA as well as EMA. These approvals will significantly expand our capability to address US, European and global market opportunities with a competitive advantage. Now moving on, I will present key financial highlights. I will first discuss the highlights for the quarter, followed by the highlights for the full year. The fourth quarter delivered year-on-year revenue growth, wherein revenues increased by 6% to 1,644 crores compared to 1,557 crores in the same period last year. Revenues from operations stood at 1,581 crores, up 3%, driven by healthy growth in small molecules, which was up 15%, as well as research services, which was up 14% as compared to Q4 last fiscal. The biologics segment performance was impacted by COVID-19 related to logistics and other challenges, while branded formulations also declined 12% as compared to last year. We recorded gross R&D spends of 139 crores this quarter, which corresponds to 14% of revenue ex-Syngene. Of this amount, 125 crores is expended in the P&L, while the balance amount has been capitalized. The increase in R&D spends reported in the P&L statements are primarily on account of higher spends across biosimilars and insulins. Given the depreciation of the rupee against the dollar, we booked a forex gain of 35 crores this quarter as compared to a loss of 7 crores last year. This gain is reflected in the other incomes line of P&L statement. EBITDA for the quarter is down 11% to 382 crores. EBITDA margins for the quarter stood at 23%. Reduction in gross margins due to lower sales in the biologics segment, higher R&D spends, higher staff costs, plus increase in operating costs in Malaysia have led to the reduction in both EBITDA and EBITDA margin. Core margins, that is EBITDA margins net of licensing, impact of forex and R&D, stood at 29%. Net profit for the quarter was at 123 crores, down from 214 crores last year. Now coming to FY20. During FY20, total consolidated revenues for the year grew to 6,529 crores, which is a 15% increase as compared to 5,659 crores the previous fiscal. Revenues from operations were up 15% at 6,367 crores. Small molecules reported revenues of 2,094 crores, which is the first milestone of crossing 2,000 crores, which is up 18%, a very strong performance by the small molecule segment. And as far as biologics was concerned, they actually had a very strong annual growth of 29%, delivering 1,951 crores as against 1,517 crores the previous fiscal. Branded formulations recorded a revenue decline of 18% at 536 crores, while Syngene also reported a 10% revenue growth at 2,012 crores, which is also another milestone for Syngene, having crossed 2,000 crores. We incurred gross R&D spends of 527 crores on R&D this year, corresponding to 12% of revenues excluding Syngene. Of this amount, 439 crores is reported in the P&L, while the balance has been capitalized. The capitalized amount relates to biosimilars and insulins development expenses. For the full year, we spent higher amounts across biosimilars and insulins, as well as ANDA and novel development programs. For the full year, we booked a forex gain of 65 crores compared to a gain of 28 crores the previous fiscal. EBITDA for the full year was 1,765 crores, which was up 15%. And EBITDA margins were at 27%, which is very similar to the previous fiscal. Core margins, that is net of licensing, impact of forex and R&D, stood at 33%, which was up 1%, that was 32% the previous fiscal. Reported net profit for the year stood at 748 crores, which includes certain exceptional items. Adjusted for exceptional items and associated tax, net profit for the year was 760 crores with net profit margins at 12%. Coming to reviewing business segments performance for the fourth quarter and the full year, let me start with small molecules. The strong performance of the small molecule segment during the fourth quarter was led by a further ramp up of our generics business in the US market. For FY20, the improvement over the previous fiscal was led by a strong performance of generic formulations in the US on the back of consistent client acquisitions and increased market share for all our products. This was also aided by the API business performance, which has been driven by a better product mix and realization over the previous fiscal. Branded formulation business has underperformed yet again, and we believe that this business is going to be a strong focus for us to see how to turn it around for a better performance. The business has been challenged with pricing pressure, which has led to a decline in revenues, and there have been logistics and distribution disruptions in the month of March, which has also contributed to a further decline. I would also mention that our branded formulations business in the UAE through our JV entity Neo Biocon has not only faced significant business challenges in the last fiscal, resulting from mandated price rebates from the Ministry of Health UAE, but is now facing other challenges wherein our JV partner has come under investigation for governance issues, which is likely to have a reputational impact on the JV. As a company committed to the highest standards of governance, we have decided to wind up the JV entity. Going forward, we will plan to market our biologics products under our own brand name. Research services delivered a steady year-on-year growth in the fourth quarter, led by a continued strong performance in discovery services and a very healthy Q4 performance in development services. For the full year, the performance was driven by a broad-based growth across all business verticals and an improved traction in discovery services. Now, moving to biologics, I will hand it over to Dr. Christian Hammerscher to discuss the performance of the biologics segment.
Good evening, everyone. For Biocon Biologics, let me dive straight into the factors that have impacted our Q4 performance. After 7 straight quarters of strong revenue and profit growth, we saw a sharp dip in Q4 performance, with segment revenues coming down by 21% and segment profits coming down by 84%. The COVID impact was significant. About 103 crores of products that were scheduled to be shipped at the end of the quarter was held up due to logistics issues related to COVID. In addition, we were impacted by lower profit share contribution from our partners. We take comfort from the fact that market share of our products in the US are maintained at the same level, and as such, we believe this sharp dip is a one-time effect, and we will see a recovery from Q1 onwards. We expect pegfilgrastim and trastuzumab sales to pick up with new contracting in the US and gain traction in many markets across Europe and rest of the world. Other recent launches by our partner Mylan include pegfilgrastim in Canada and Australia, which adds to our oncology portfolio with trastuzumab in both countries. Mylan has reiterated that they have strong confidence in their long-term capabilities from physician payer hospital standpoints to fully execute commercially on the growing biosimilar portfolio throughout this fiscal and in the coming years. We are therefore confident to reach our target of $1 billion by fiscal year 2022. Moving on to regulatory matters. We received FDA pre-approval for our Malaysia manufacturing facility for insulin glargine. We also received a favorable district court decision with respect to our ongoing patent litigation for insulin glargine, and further IPR decisions remain pending. Through Mylan, we also continue to be engaged in active discussions with the FDA on a viable path to obtain an interchangeable designation. As such, we remain on track for launch mid-year 2020. Glargine is a $2.2 billion market, and we believe this product will be an important contributor to our growth in fiscal year 21 and beyond. In addition, we expect Mylan to launch etanercept in Europe in the second half of this calendar year. Biocon has shared economics in this program. Other updates on our biosimilar programs include the review of our BLA for biosimilar bevacizumab, both by US FDA and EMA. On the insulin front, we are on track with the development of Aspart. Our recombinant human insulin program is also progressing well under the new 351(k) pathway. Overall, we are targeting to have at least 8 biosimilars being sold in developed markets by the end of fiscal year 2022, addressing a market opportunity of approximately up to $35 billion. Our pipeline is expected to continue to deliver at least 3 additional molecules between fiscal year 23 and fiscal year 25. Thereafter, we expect to launch 2 molecules per year. COVID has given us an even larger opportunity to shape the biosimilar landscape. Global healthcare will be compelled to leverage both generics and biosimilars to contain healthcare costs, and we would like to position ourselves in a leadership league that drives our vision of delivering affordable access to innovative and inclusive healthcare solutions. We continue to see the biosimilar market as a significant opportunity to be played out over many years and across markets globally. All regions show strong promise with high single to strong double-digit growth, underlining the tremendous potential that biosimilars offer. The total global market of all biosimilar monoclonal antibodies and therapeutic proteins is anticipated to grow from approximately $25 billion today to $55 billion in 2025, based on consensus estimates. Whilst we are currently focused on developed markets such as US, Europe, and Japan through strong partners, we also believe that the demand for biosimilars in rest of the world markets is rapidly increasing. We already have a presence in the majority of the top 20 markets, and we plan to expand our geographic footprint even further. With 28 molecules in our portfolio covering oncology, diabetes, immunology, and other therapeutic areas, we offer one of the industry's largest and most diverse global biosimilar portfolios. We are one of the few fully integrated players with scientific speed and manufacturing scale that provides competitive advantage and uniquely positioned us as a fully integrated, pure-play global biosimilar company. We see fiscal year 21 as a step-up year with strong revenue growth and steady EBITDA margins. We will be able to provide more color on this guidance in the next earnings call after some of the COVID-related uncertainties recede. With this, I will hand back to Kiran.
Thank you, Christian. So let me conclude by making some comments on the outlook. The new financial year comes with a new set of challenges in the midst of the ongoing COVID pandemic. However, we are confident of emerging from the current situation stronger and more determined than ever to deliver on our commitments to our patients, partners, and stakeholders. While uncertainties may persist during FY21, we expect the biologics segment to continue to lead overall revenue growth for Biocon and steady growth expected in both small molecules as well as research services. With that, I will now open it out for question and answers.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity and good evening to all. My first question is on again the statement which Christian made on the biosimilar business that there is 103 crore delay in shipment. So how do we think about it? Like if we add that, it is flat YOY, but still there's a decline of 20% Q and Q. In the past, we have said that biosimilar business would continue to ramp up pace. So what are we missing there? Why the Q and Q big large dip? A and B is on lower contribution from the partner. What is leading to that? Are the primary sales, and secondary sales too different?
So let me answer that by saying that, as you know, Christian talked about 2 factors that basically gave us this sharp decline in performance this quarter. One, as you rightly said, was the 103 crores, which, as you said, is not good enough to show why we didn't grow. The second one really was about the COVID impact in the US, where I think the movement of inventory to distributor channels was certainly very badly impacted in the month of March, which also then directly impacted us as well. So I think this is what has really led to this very sharp decline. We have seen a pickup of the business both in the US and many other markets, and that is why we feel confident that we will see a good recovery in Q1.
Okay. And the second part, ma'am, on the lower contribution from the partner, I mean, the EBIT margins are down to 7% versus an average of 25 to 30%.
Prakash, hi, Chini here. Yes, Prakash, as you kind of picked up, it's the secondary sales and the primary sales play. So secondary sales, of course, is the sales from the wholesalers to the hospital and clinic, and primary sales defined as the sales by us to a partner and a partner to the channel. The real measure of performance is, of course, the secondary sales, and as you've seen from the data, generally our market share is steady at the prior quarter levels with a slight uptick in trastuzumab. However, during this quarter, this did not lead to a matching increase in primary sales, thereby impacting both our revenues and profits. Again, as Krishan already mentioned, we see this as a one-quarter effect, and we are confident that when you look at the overall business, we will see recovery in Q1 and normalization in Q2.
Perfect. If I may just add one follow-up, like Kiran ma'am said that, it's more so due to the impact in the US. So given these are hospital-led products, so we are seeing some improvement. So the patients have to necessarily come to the clinics or hospitals to get the treatment done, or there are some, campaigns being done by Mylan, or what are the initiatives which are taken in terms of closing the gap?
So let me answer this question. As you know, with the growing, COVID pandemic in the US, I think there was a lot of challenges in many of the hospitals to offer the treatments to patients, non-COVID patients, as you know. And therefore, there was a lot of focus on COVID treatments, and many of these patients have basically had to defer a lot of their treatment. Now it's all coming back. So we believe that with these improvements, you are going to see business recovering very rapidly.
Okay, perfect. I have more questions. I'll join back with you. Thank you so much.
Thank you. We take the next question from the line of Dhaval Shah from Girik Capital. Please go ahead.
Hello.
Please go ahead.
Hello. Yeah, thank you. Yeah, ma'am, two questions on the biologics. First is on our $1 billion revenue guidance for FY23. How would our biologics balance sheet be like? What would be our capital employed, expected return on capital? Just want to get some flavor on that. Then secondly, if you want to understand the entire business economics of the biologics business, which balance sheet should we look at? Which company's balance sheet should we look at? Biologics India Limited or the Limited? Can you just also give some clarification on that?
So let me first correct you. It is FY22 that is our $1 billion target, and we remain committed to that target because you cannot be questioning that target based on one quarter's performance. This is a one-off, as we've said before, and we are on the path to recovery, and therefore we are not at all concerned about not meeting any of those targets. We are very confident that we will meet the $1 billion target by FY22. Coming to the balance sheet, I will request Chinnappa to comment.
Hi. The balance sheet part of it it's actually difficult to create the biologics balance sheet currently because it's a combo of Biocon Biologics India Limited, there's a UK entity, there's a Malaysia entity, and we have another. another Malaysia entity also just set up. Now, we will, in the subsequent quarters, actually present to you independent to fully detailed P&L for the biologics segment and the small molecule segment. So thereby you will start to see from next quarter onwards a full reporting of the separate businesses. But for now it's difficult, and there's a lot of common costs that are getting apportioned and you can't read the full.
Okay, so see, we have...
Sorry, there was a second part of your billion-dollar question where you asked what the margins will be. It's difficult to really split margins down into FY22 because it's also dependent on the R&D costs and the mix of really how much the R&D spends are. But for now, if we look into FY21, as Christian already mentioned, we're looking at steady margins despite higher R&D costs.
So broadly, we have currently 4,500 crore invested as capital employed as per the FY20 press release. Now, so to achieve a 7,000 crore top line, $1 billion, so how would our capital employed move? So what are the economics of this business? I understand R&D is a big component of capital employed, but broadly, given it's a 2-year period, we would have some sense and what would be the ROC look like, because we are currently at some 10% for FY20. And also given a lot of our new products are getting launched in US, which are higher margin, so this will broadly give us some idea to us in terms of how should we approach this 7,000 crore profitability.
That's behind it, but I'll just give you a directional sense.
Yes.
Today, our capital assets, the total investment is just under 500 million. If you look at the gross fixed assets, I'm not looking at net fixed assets, I'm not adding working capital, it's 3,300 odd crores. Now, from there, we have additional capex that's underway, some work, investment in work, capital work in progress, plus some additional capex coming up next year. And that total investment can support the $1 billion guidance. So
I think from an ROC point of view, we are guiding in the range of around 20 to 23% ROC in the next 2 years.
Okay, great. So your current gross block is 3,300 crores, and which will see addition in the manufacturing facility for the new product.
Yes.
Okay, and in terms of the capex guidance, it will be 1,000 crores X of Syngene for the over next 2 years, or
it will be roughly $200 million per year for next 2 years. That's half and half for biologics, another half for small molecules.
Okay, 200 million.
This is at a group level, ex-Syngene.
Ex-Syngene, correct. And from this, 100 million would be, you said, would be for biologics and 100 will be for...
Yeah, that's right. Exactly.
Okay.
So we are giving you an ROC for the biologics business.
I think in the past I've mentioned that if you look at the segment ROC biologics, which has obviously inched up over the last couple of years, is at 11%, as you rightly said, in FY19 and FY20. When you compare with small molecules and research, which is already at 2022, the scope for improvement in biologics is huge, because from a profitability perspective, biologics is the most profitable segment. And what we definitely expect once we are out of the capital investment cycle, the ROCs with a higher EBITDA margin would start going up significantly and will catch up definitely at a group other segments level.
Correct. And sir, in terms of the balance sheet, to understand the entire business, you said over next 2-3 quarters you will be grouping everything under one entity, the entire biologics business. Do I understand correctly?
So I think what Chini meant was that we will be reporting segment sales. We'll be redoing our segments next year. So there will be small molecules. There will be biosimilars, no longer biologics, because biologics also has novel biologics as a part of it. This way there are only expenses.
Yes.
And there is branded formulation India component, which is currently reflected in the segment revenue, but they are going to be reclassified under biosimilars. And research services will continue as is. So from a segment reporting, you will see segment revenue and segment results in 4 segments: small molecule, biosimilars, research services, and novel biologics. The detailed P&L for all the entities is uploaded once a year on our website in line with the requirements of Companies Act.
Correct.
So it will be visible once a year. Now the statutory requirement obviously is to present a consolidated balance sheet and P&L along with segment revenues and segment capital employed.
Yes. And so the money what we raised is under Biologics India Limited. Am I correct?
That's
from True.
Yeah, right.
Okay, and the IPO, whenever in the future it comes, it will be for Biologics India Limited.
Yes.
Okay, madam. Thank you very much.
Thank you. We take the next question from the line of Diresh Pathak from Goldman Sachs. Please go ahead.
Yeah, thank you for the call. Just a follow-up to the earlier participant's question. This Biocon X Syngene CWIP, I'm seeing about 1,340 crores. So can you just explain the underlying asset, what is sitting in CWIP X Syngene?
So Biocon X Syngene is up 330 crores compared to March 19, of which a significant portion is pertaining to our new biologics facility, which is under commissioning, and our new research services facility, which was acquired in Chennai from Pfizer, and certain other capacity enhancements that are underway. But the new antibody facility and the Chennai R&D facility would be the largest component of that increase.
Okay. And this $200 million capex over 2 years for biologics, this would be sufficient to...
Diresh, it's 200 million per year over 2 years, for 2 years.
We split 50-50, right? So in 2 years, you will spend $200 million for biologics, right?
Yeah.
And that $200 million over 2 years for biologics, that is sufficient to give you enough manufacturing capacity for $1 billion of sales, right?
Right, yes.
Okay.
So the turnover growth will be higher than the asset growth, and we'll see improved asset turnover and an improved return on capital.
Okay. And Ginny, you also just mentioned that there is a gross block of 3,300 crore in biologics, and the asset side is about some 6,000 odd crores mentioned in the published numbers. So that leaves us...
Just read me a thing. I said gross block, not net block.
Yeah, but the assets are showing as 6,300 crores. So even if net block is lower than this, then there is a lot of working capital sitting in biologics. It seems I'm missing something.
Yes, there is obviously there's working capital which represents the rest of the investment.
But compared to the scale of the business, this looks like a lot of working capital. It's like more than 3,000 crore working capital for a business which is made at 2,000 crores.
No, it's not 3,000 crores.
It's not 3,000 crores for sure. See, you look at the capital employed of biologics, it's at 4,500 crores. The net block is how much?
The asset size we'll have to look at, because the capital employed is just shareholder equity. I'm looking at the assets. Assets are 6,382 crores. Maybe I can take it offline.
Yeah, take it offline. There is a big CWIP also sitting in there.
Oh, okay. So that 3,300 did not include the CWIP.
Yeah, what I meant is what was deployed assets, and there's a CWIP component. I'll walk you through that.
Okay, I'll take it offline. Thank you. Yeah.
Thank you. Next question is from the line of Damayanti Kerai from HSBC. Please go.
Hi, good evening, everyone. Thank you for the opportunity. So recently, your partner Mylan in their March quarter call mentioned that they're shifting to execution and strategic performance for the biosimilar franchise. So if you can update us on how your commercialization and marketing strategy has changed since you launched your first product in the US, so that will be helpful, and how this is in line with your target for 1 billion sales from biosimilar by fiscal year 2022.
So thank you for your question. Questions regarding marketing strategies and operations, Mylan is in the best position to state that. But as I've already said, Mylan has expressed, and so do we have the strong confidence in their capabilities. Because what we expect in the is an expansion of the pegfilgrastim business. You are aware that trastuzumab was just launched end of last year in December. We expect their market trajectory. We are looking forward to the upcoming launch of glargine in the US. And certainly the US is the biggest component for reaching the $1 billion mark. So we remain very, very confident. Mylan has clearly expressed focusing on commercial execution. And with that, we also predict that new contracting in the US for all our products will come through.
Sure. So you just mentioned expansion of pegfilgrastim opportunity will be critical towards our $1 billion goal. So how much progress we have made in new segments, say 340B hospitals, and how has the new ramped up capacity helped us in reaching out to newer markets or newer segments?
I think this is a question better posed to Mylan, because they will be able to give you some visibility on these kind of questions. I don't think it is right for us to comment on their behalf.
Sure, ma'am. Last question from my side. How much of your operating cost is flexible in nature? And if the COVID situation goes on for a bit long, how much headroom you have to manage cost in near to medium term?
So if you look at the fact sheet, the expenditure section, the power cost, staff cost, and I would say more than 50% of other expenses would be fixed in nature. What is variable is obviously the material cost, part of R&D cost, and other part of the other expenses.
So Saurabh, most of our costs are fixed in nature, and as you mentioned, some are flexible, which we can manage if situation persists longer.
Yeah, that's right. So you look at the gross margin, I think gross margin is the best indicator. 61% is the gross margin for the quarter. Mm-hmm. And gross margin is at the material and the power level. And if you look at the net margin at 8%, which would mean that you will have around 20 to 30% as the fixed cost.
Sure. Okay. Thank you. That's all from my side.
Thank you. We take the next question from the line of Neha Mantri from JP Morgan. Please go ahead.
Thank you for taking my question. My first question is on the biologics business. You mentioned that FY21 should see a stable EBITDA margin in biologics. Could you give us some color on what could be the R&D spend? Could it be significantly higher, which will lead to this stable margin? And also, just related to that question, how are you looking at pricing? What have you seen in pricing for Ogivri, given we've seen multiple players come through in the quarter?
So let me answer that by saying that obviously competition is factored in when they look at projecting what their outlook is going to be. And I think Mylan has already projected that they are very confident of a good performance in FY21 and beyond. So I think if you look at that aspect, then I think it is not that competition is something that was not factored. Secondly, I think as far as we are concerned, when you look at stable margins, obviously we do realize that there's going to be increased R&D spend. There will be, a factoring of some of the investments, capital investments that have been made. So considering all that, we still expect to sustain these kind of margins that we're seeing in FY20. So I think that's the way it has to be looked at, saying that despite large increases in R&D spends and depreciation, we are likely to still maintain stable margins.
Siddharth, in that case, can I ask you what is the guidance for R&D for FY21? Is it still 15% ex engine, 15% of sales ex engine?
No, I think the range will be 12 to 14% at a gross level.
Okay.
Because expect the absolute number while it will go up, but the revenue growth in biologics will also increase the base.
Yeah, so in which case, given we'll have 3 products contributing in FY21, even with the higher R&D, a large part of our cost increase had come in through in FY20. Shouldn't we be seeing some margin improvement in FY21? What am I missing here?
So there is obviously the 3 products that are more from a commercial perspective, but there are many other products which will be in the development stage and will be advancing to the next stage of development. So the expenses would be required to continue to fund the pipeline in both our businesses.
And remember, this is at a consolidated level. So you're going to see even the ANDAs and the biosimilar pipeline being developed, plus the novel programs that we are developing. I think you're missing the point that it is not just the biologics business on a standalone basis.
Fair enough. My second question was on the fundraising in biologics. After the first tranche, given the current COVID environment, do you see a delay in the subsequent rounds? And B, in case there is a delay, could this, for whatever reason, impact our ability to fund our growth plan for the next year in biologics?
So Neha, let me take the second question first. We do have enough leverage on our balance sheet to take money. So even if there is some delay, we do not anticipate an issue because all the investments which are being planned, we already have a plan to fund those capex. And obviously the business, as it grows into next year and generates the kind of margin that we indicated, will also generate operating cash.
And I think, Neha, I would like to add that just one quarter dip doesn't mean anything. So I think you have to read it in view in the perspective of saying that this was a one-off temporary blip. But we are very confident that the business is recovering. And this is a very strong business. And this is a business that is on a growth trajectory. So I don't think you have to, panic at one dip in one quarter.
No, ma'am, fair enough. I was just wondering from a capex and R&D funding in case the subsequent rounds of fundraising is delayed.
Yeah, I mean, as Siddharth just explained, we are well covered and well leveraged in that sense. I don't think we are really in a situation where we are desperate for raising the next level, but it is it's something that we are looking at in terms of raising this funding because it's important for us to create the value that we are talking about.
But also in general, yesterday also there was an article in one of the newspapers that there has been a slowdown in the overall private equity transactions because the investors are taking a cautious approach and wait and watch approach. So naturally there could be some impact as a result of COVID on the timing.
Thank you so much.
Thank you. Next question is from the line of Nithya Balasubramaniam from Stanford Bernstein. Please go ahead.
Hi. Thank you for the opportunity. I just wanted to start by saying a simple thank you for obviously providing us with essential medicines, us and the world with essential medicines during these difficult times. So thank you. I had a couple of questions on insulin glargine. So you did mention interchangeability. So one question is, do you have any visibility into what the FDA is expecting and any visibility on timelines as to when that might materialize? And the second one is basal insulins. Obviously, rebates are very, very high. 70-75% rebates is what we see in this space. And given that your intent has been to improve affordability in this space, I would expect a meaningful discount in this product. And interchangeability obviously determines how much of a discount can Mylan actually give in this market. So question about how you're thinking about when this interchangeability might happen and how your discounting and pricing strategy might actually change depending on that.
Okay, I'll take the question. This is Sundar Ramanan. I'll take the question with regards to the FDA and interchangeability. As you know, that the agency issued a guidance for insulins that specifically talked about a pathway that will lead us to a faster requirements for interchangeability of insulins, and we are actively working with the agency in bringing that faster. Once we get to know the path, we'll be happy to share the details with you. For now, we are actively working with the agency.
Okay.
Regarding pricing and discounts, this is strategy is specific, and we are not commenting on the details. But Mylan is very well versed and tests all the capabilities to position our molecule in the US market in a successful way.
Sure. If I might just follow it up, I understand that you don't want to comment on Mylan's commercial strategy, but the point I'm making here is there's a huge swing between the kind of revenues that Mylan and subsequently Biocon can make depending on if there is an interchangeable status or not. So is the plan then to go ahead and commercialize the product irrespective of whether you have interchangeability or not in June or whenever you have the approval, and then tweak the strategy if and when you get interchangeability, and does that mean we might see significant changes in the market status as well?
Paul, can you please take that question?
Sure thing. Yeah, so I think a couple of things. I'd say this, it's a sizable market, right? We talked about $2.2 billion market. This is with discounts factored in there already. With that, those existing rebate structure factored in there already. And we know that there's still a need on insulin affordability for patients, and so this can be so there's a need that is waiting for Mylan to address. So we think there's an opportunity there. In terms of the criticality of interchangeability, I think we've talked before that this is certainly something that we are pursuing, and Mylan has talked about that as well. But we've also seen that this market is very centrally driven by payers, by PBMs, and they are able to move market share. They've shown ability to switch between products without the requirement for interchangeability. So it's really not a it can be a factor, but I wouldn't characterize it as the critical must-have for moving share in this market.
Can I read that as interchangeability is not really critical for your $1 billion aspiration?
Yeah.
Okay. Thank you.
I think that's fair.
Thank you. Next question is from the line of Shyam Srinivasan from Goldman Sachs. Please go ahead.
Hi, thank you for taking my question. Just the first one on the small molecules. Can you just talk us about the pricing environment right now in the US? Secondary data seems to show that it's kind of easing now, but are you seeing it, in your portfolio as well? And do you think it's sustainable? Maybe there is some March effect with stocking up and stuff, but do you think you're now moving to a trajectory where inflation or deflation is kind of easing for US generic?
Shyam, the pricing pressure has normalized, which means there's still a price erosion, which is an annualized price erosion in the range of 5 to 10%. The good part is that with a little strong currency, we make up an impact of what otherwise we end up giving as a discount. We partially make it up. Now, we do not see this situation changing where, a serious disruption in terms of competition or significant number of new approvals coming in from FDA, which will increase the pricing pressure to the levels what we had seen in 2019.
Okay. Okay, that's helpful. Just carrying forward, because of the COVID impact, we have seen a lot of noise around the API and API shifting out of China and to potentially India and other countries. Given your conversations with your customers in the US and Europe, are you getting a sense of that, that you could actually play a larger role in API supply to these countries?
I think there's definitely discussions happening, but I don't think that there has been anything concrete on this. I feel there's a lot of panic created because once the COVID started in China, everybody's eyes were towards China. And when the COVID spread to other parts of the world and China resumed normal operations, I think the focus has changed to shifted to India because India is still dependent on China. So I think the risk on China has been lesser of a focus, and the fact that the regulatory timelines to qualify an alternative source ends up being few years. Right now, in absolute short term, the customers don't have a choice to switch over. But once the dust settles down and if things get to somewhat level of normalcy, that's when we'll know really if there is a structural change of move from China to other parts of the world in terms of the API sourcing.
Got it. Got it. Thank you and all the best. Thank you so much.
Thank you.
Thank you. Next question is from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, thanks, and good evening, everyone. Christiane, when you mentioned that you expect 8 approvals for developed markets by fiscal 2022, are you including aspart and human insulin in this?
Yes, both molecules are included, aspart and recombinant human insulin.
Okay, great. And if you can update us on the progress of the clinical trials and if the current COVID situation is impacting these 2 drugs, and what are the filing timelines for the US market?
The COVID will not affect our clinical development. We will keep you posted in the future calls with regards to our filing.
Okay, great. And just on the biosim sales this quarter, if I were to read your expectation going forward, when do you expect the Q3 sales, Q3 fiscal 20 sales to return back? Is it in Q1 current year, Q2? Any color would be very helpful.
So what we have clearly said is that we will recover from Q1 onwards and we will normalize back to growth from Q2 onwards.
Okay, when you say normalize, you are referring to Q3 level where we left, I guess.
Yes, back to growth, back to a growth trajectory.
Okay, and as things stand today, what's the what's the status on the manufacturing and outbound logistics? I mean, is it more or less normalized? It's business as usual.
Hi, Sameer. This is Shreyas here. So things are not perfectly normal here, but we are seeing that things are returning to a better position than it was a couple of months ago.
Okay, one final question from my side, if I may. The employee cost has been going up, every quarter for last several quarters. So, is there any specific areas where we are hiring? Are these high-value talent that you are hiring? Any color would be very useful.
So with the high-value talents we are hiring, we are very, very specific and very, very strategic on hiring talents for a few key positions in our organization to deliver on the strategy and also the commercial execution in particular. We are very strategic, very, very focused on a few talents for our business.
Christiane, is it for developed markets? Is it for emerging markets? If you can help with that.
It's actually for global functions where we cover all the markets.
Okay, great. Thank you so much.
Please go ahead.
Mr. Surya Patra, you may please go ahead.
Yeah, okay. Yeah, thanks for this opportunity. Just one clarification I just wanted to have before asking any question. Ma'am, in the opening remark, you talked about manufacturing or having backward integrated activities like doing some of the manufacturing in-house instead of procuring the raw materials from outside. Can you just is it about the small molecule business that you are referring, or it is for the biologic business?
No, this is about small molecules. As you know, there was a lot of dependence on certain imports from China. And I think that's what we were referring to, saying that we actually had stocked up. We have a large inventory. And because of that, we don't see any disruption.
Okay, fine. My first question would be, ma'am, in fact, this Malaysia venture, since we have completed the year, what were the kind of, can you just give some sense about the kind of a break-even situation there? What is the cost impact that we are still seeing for the consolidated business from that? And you also mentioned about the higher operational cost right now for that setup. Along with that, what is the timeline for the next phase of expansion there in the Malaysia?
So, Surya, hi.
Yeah.
Malaysia facility is still operating at a loss, and actually in FY20 the loss increased, but we'll see FY21 Malaysia moving back to profitability with the launch of the glargine in the US.
Okay. Okay. So in fact, we are having a kind of impression that the losses at the Malaysia level should be decreasing compared to FY19 with the supply starting from the current base. Was that whether we have not seen that kind of trend?
So as Surya, this is Shreyas here. You're right. Actually, as we've said before, once we have approvals in the US and other markets start coming in, we will see Malaysia return to profitability in the coming year. Additionally, I think you had asked a question which is related to a subsequent phase of investment. I think in the opening remarks, Kiran and then Krishan also talked about the pre-approval that we are looking at for glargine and a subsequent approval to get that into the US. At this point, we have adequate capacity to meet our current market projections, and we are confident about that. And we are, geared up to take up the subsequent phase of investment shortly, which we will keep you posted in due time.
Okay. And just on the branded formulation business, which is transitioning to move towards the moving towards the part of the Biocon biologic business, and we have also winding up the JV there in the UAE. So what is the fate of that business? How should we be looking at whatever the licensing pacts that the JV is currently having, whether it will come to, whether it will be there with them, or we'll have that licensing pact? Some color on that business possibly will be helpful.
So let me talk about the JV business first. The JV revenues in the last whole fiscal was roughly 70 odd crores. So it was a very small base.
Yes.
So had a loss. If you look at the fact sheet, Biocon's share of JV loss was 29 crores. So on a sale of 70 crores, there was a significant loss, which is at 49%. We had 29 crores of loss. So that's the reason why we are shutting down the operations. Now, there were two parts of the business in UAE. One was the JV business, which was purely the small molecules generics, branded generics business, which is what we are shutting down. There are two biosimilars in the market. One is glargine and second is trastuzumab, which was included in branded formulations, but going forward it will be part of a biosimilars segment. And that would continue.
Okay. So, okay. So what portion of the revenue line would be really be moving out because of this restructuring, sir?
As I said, 70 crores out of 536 crores of branded formulation sales.
Oh, okay.
Roughly 70 crores is the JV revenues.
Okay, fine. Just last one more question on this. This on the margin profile and the business progression that we have been talking. By 2020, we are expecting about $1 billion kind of a biologic sale, which is more than 3x of the current biologic revenue that we are generating. So, given that ramp up or the jump that we are expecting to achieve, and we are not also seeing that the R&D spend, which is the biggest cost component there, is not likely to move in the similar tandem. So then, should not we be seeing a kind of significant improvement in the overall profitability of biologic as well as the overall Biocon business by 2020?
2022, you mean? FY.
Yes, sorry, 2022.
So there are a couple of points. I'll just answer the biologics business.
Yeah.
So when I meant steady margins I said for FY21 at the EBITDA level really.
Okay.
The benefits flowing below that. It's too early to guide for FY22 because it's still a way to. It's dependent on R&D spend, of course, and sales mix. Both sales product mix and region mix. So I've not yet given guidance around FY22 numbers. We will do that at the appropriate time.
But what we've also said is that biosimilars business is the highest margin business, as that business is the highest growth driver over the next 2 years.
Yes.
The consolidated margins would go up, and obviously from a research expenses perspective, the absolute number would go up, but over that 12% number is more for next year. As we go forward and we reach the $1 billion number, on an absolute, the percentage would start coming down even if the absolute number goes up.
Yes.
So the margin accretion would happen.
And as you said, since you're going to treble the top line of biologics, and it's a high margin business, so you can proportionately see that the R&D spend would obviously come down.
Correct, ma'am. Yeah. Thank you. Thanks a lot.
Thank you. Next question is from the line of Amit Rishade from Jupiter Asset Management. Please go ahead.
Hi there, this is Amy Truesdale. Thank you for taking my question. First question is actually on China. Given the Mylan Upjohn merger, when do you start expecting to see biologic sales in China? And is any of that included in the $1 billion target?
The number is not included. The China number is not included in the $1 billion target.
But there's absolutely no doubt that the merger of Mylan and Upjohn will absolutely strengthen the position and the opportunities we see for our biosimilars in China. It's very, very encouraging to see in the last 2 years that biosimilars have entered the National Drug Reimbursement listing, which in one go allows that a whole nation has access to biosimilars. And we believe that Mylan and Upjohn together as Viatris will play a strong role in China.
Great. That's really great to hear. And any sense of timeline on when, is it a matter of months or is it a kind of number of years?
No, we are currently not commenting on the timelines.
Okay, great. And just my second question is, you speak about expecting a recovery in the next few quarters. Just wondering what your base case is for COVID. When are you sort of building in for a vaccine or treatment to be available, and are you building in a second wave?
Well, this is being speculated across the world, but as far as we are concerned, we are really focusing on safety in the workplace. And I think we will try and aim to keep our operations going and we will look at seeing how we can keep the logistics and the supply chain efficiently running. So I think that's where we will focus. It's very difficult for us to predict whether there's going to be a second wave or not. But we will be in a state of preparedness because we should plan for a second wave, and that's the way we look at the future.
Great, thank you. That's very helpful.
Thank you. We take the next question from the line of Nitin Agarwal from IDFC Securities. Please go ahead.
Hi, thanks for taking my question. Ma'am, will it be possible for you to give us a flavor of the geographical split between US and the non-US markets, very rough, or either market for a biologics business as it is now, and when you and as it could be under the 1 billion by 22, we're talking about $1 billion of revenue. Any sense on what kind of geographical mix are we looking at in the business then?
What I can tell you, there are three components that are important, and I mentioned them in the order of magnitude. To reach the 1 billion, component number one is the United States. Component number two are most of the world markets, and component number three is Europe and other developed markets.
Okay, thanks. That's helpful. And what would be a consolidated net debt as of you?
Just a minute. So the consol net debt as of March 20 is 760 crores, or give or take $100 million.
Okay. And lastly, second, what proportion you mentioned about the biologics business partly being shifted from branded formulations to biologics for next year? On an aggregate annual level, what would be the amount of the business that we are shifted in to biologics now?
No, I just mentioned some time back, 536 was the full year revenue for branded formulations. 70 crores was UAE. So remaining 460 crores, 470 crores is branded India.
But that won't be all biologics, right?
Well, the branded formulations business has been completely under Biocon Biologics. So the 70% plus of that revenue is biosimilars, but the remaining is pertaining to small molecule drugs. But the operations is being managed by biosimilars business.
Okay. So from here on, we reported under biologics revenues going forward.
Biosimilars revenue. So as I had mentioned earlier also, that we will split biologics into two, biosimilars and novel biologics.
Okay. Thank you.
Thank you. We take the next question from the line of Raj Mohan, private investor. Please go ahead.
Yeah, thank you for the opportunity, and I wish to take this opportunity to deeply appreciate the various efforts taken by Biocon and Ms. Kiran ma'am in the fight against COVID for the benefit of the society at large, and in spearheading a lot of the Indian pharma industry initiatives. You indicated on the biologics front, you indicated to the post-COVID scenario where structurally one should expect a much stronger environment for the biosimilars, what with the global economies coming under severe financial strain. How about the structural impact on the regulatory environment like FDA due to COVID-19? Do you anticipate the engagements and approvals to be swifter? How do you see the movement towards approval of, say, assembly in this context?
At this point, we don't see any impact of COVID on the regulatory interactions with the agency, and we remain confident about the assembly approval along with our partner Mylan, as we have previously indicated.
In fact, on the contrary, I was wondering whether things could be moving a bit more faster post-COVID than the global economic scenario, when an approvals come in faster.
See, as you know, these in the U.S., these are statutory timelines, and the FDA has to go through certain under PDUFA and BSUFA acts. They have certain mandate and standard timelines, and that's what they're going to go through.
Okay. Next, coming to market share gains in Fulphila post your capacity expansion. Where are we now currently in terms of market share, and what is the internal estimate on reaching closer to 20% as the leader Coherus seems to have gained a couple of more points in market share this quarter from 20 to 22%?
Paul, can you please take that question?
Sure. I think we've been consistent. We're around this 6% market share level, and we see this growing over time. I think as Mylan has talked about, the foundation is built, the capabilities are there from physician, payer, and hospital standpoints, and there are green sprouts as they've talked about that they're seeing. So we expect steady progress upward on our share here.
Okay. Mylan has in their call indicated to garnering about 3% market share in Ogivri. Has Biocon been impacted by lower profit share this quarter, and will a larger recognition flow through the next quarter?
Yes, we have been impacted by lower profit share this quarter. And as we said, there has been a lot of impact on account of COVID, because we have seen a huge drop in hospital treatments, which of course have also impacted the uptake of many of these products. So we do expect to see a good recovery this quarter, and as Paul just mentioned, there are green fronts that we are seeing, and we expect this to now pick up and we will recover during this quarter.
Okay. One final question on Adanescent, which is planned to be launched by Mylan in Europe. What is the market size, and when could the US launch be planned?
Peter, can you take that question?
Yes, thank you for the question. So the current estimated value in Europe based on 2019 sales of the originator is about 2 billion. As you know, the CHMP has just given a positive recommendation end of March. The US launch is anticipated more towards the end of this decade. So I hope that addresses your question.
Okay, thank you very much, and best wishes.
Thank you. Next question is from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead. As there's no response from the current participant, we take the next question from the line of Bharat Seth from Quest Investment. Please go ahead.
Hello.
Go ahead.
Yeah. Can you quantify the loss from Malaysia in FY20?
Excluding R&D cost, it is 160.
160?
160 crores.
Okay. My second question pertains to, just like you quantified 103 crores as impacted by shipment delays, is there any, what would be the number in the current quarter?
Current quarter is not over. So
what do you mean? What do you mean by that question? We didn't understand.
No, in the sense this number is up to March. So
the current quarter has
to be completed in June, right?
Yeah.
Till on July 2nd.
Okay. And my question is that what is the kind of growth we expect in small molecules going forward?
Well, the growth on a full year basis should be a high single digit to low teens for small molecules business. And this is for the next 1 or 2 years, in fact.
Okay. Yeah. Thanks.
Thank you. Next question is from the line of Bharat Seth from Quest Investment. Please go ahead.
Hi, thanks for the opportunity, Siddharth. You said that we are spending, 200 million on the small molecule.
Yeah.
So that
when do we see the impact of that in translating in the top line, and how much out of that will be for this backward integration, if you can give some sense and color? So over next couple of 3 years, I mean, how do we see the small molecule business?
Yeah, I think the impact would, given the gestation timelines to go from ground zero to commercial, it takes anywhere between 4 to 5 years. And this 200 million will be going in new manufacturing capacities. We already started the Vizag immunosuppressant greenfield plant, and we will be adding more drug substance and drug product facilities, which is part of this 200 million outlay. And we expect the revenues to start in 3 to 4 years timeline. But the full impact of the 200 million investment would be definitely beyond that 3-4 years time frame.
And what kind of asset turnover do we really expect at the peak level?
See, in Biocon small molecules, we don't talk asset turnover because it's a combination of API and generic formulation. API being a large component when you compare it with the other industry players, their asset turnover tends to be higher because they capture the generic formulation sales. So you have an apple to orange kind of comparison, but you look at the ROC, last few years it's been stable at 22-23%, and that numbers should be able to realize once we complete the investment phase.
Okay, thanks. And would you like to give some kind of guidance on the tax rate from FY21 onward?
Yeah, I think at a group level it should be somewhere around 25%. If I have to pick a number, if I have to pick a range, it can fluctuate between 23 to 27%.
Because I believe this once the biologic which has been moving to this UK side, so we have the losses sitting in the Malaysia and UK also. There is taxation, correct?
No, UK has taxation.
I mean, we have some tax exemption, I believe.
Tax rates are lower.
Okay.
And there are some under the patent box, some more concessions under patent box. But that's the thing. Malaysia has a tax rate, but is currently operating at a loss, and the additional profits will not have a tax effect.
That's why I just want to understand from the whole consolidated basis. So would it be little lower, than what you were looking, Siddhant?
No. I think I would rather give a guidance which is more midway and something which there are a lot of moving parts on tax with so many subsidiaries and R&D expenses sitting in subsidiaries where there is no profit, and the profitable commercial business sitting in entities where there's also moving parts in terms of the tax SEZ benefits, and also I would definitely expect that 25% is something you should factor in your model.
Fair. Thank you. Thanks a lot.
Thank you. Next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity again. Just a couple of clarifications. So one of the participants did ask about recovery from Q1 and normalization from Q2, which is a statement by Christian. So just making it clear that what you mean by normalization is growth on a Q3 fiscal 20 number, or do you expect to reach that level by Q2? Or my understanding was in Q1 itself you will be at the Q3 number level. If you can clarify that will be helpful.
So what we mean is recovery in Q1, and normalization is meaning going back to growth, what we have seen in Q3.
Yeah, similar level.
The recovery is coming back closer to where we were at Q3.
Okay. And to build a growth in
normalization
Q2,
is back on the growth trajectory that we have been showing over the last 7 quarters.
Yeah, so we will exceed the number in Q2 for sure is what I'm trying to understand. Most probably.
Exceed what?
The Q3 number. So we are heading towards the Q3 number in Q1, and we are most probably, in all likelihood, we are all set to exceed the number what we have already achieved in Q3. That's the way to understand?
Look, we have said that we are looking forward to a strong revenue growth in fiscal year 21 on the back of the molecules in the United States and also on the back of increased market penetration of our molecules in EU and rest of the world. We clearly expect that we will go back to the growth trajectory that we have seen before.
Yeah. Okay. And just to tie that up with your 2022 guidance of $1 billion. So as one of the participants also said that you need to double every year. So what I understand is it would be more 22 heavy in terms of so we would unlikely double this year. Would that be correct understanding or closer to doubling?
So we actually expect that for both years, fiscal year 21 as well fiscal year 22, we see a strong growth trajectory. We have several molecules already on the market. We expect largely to be in the United States, additional molecules to launch with bevacizumab and aspart, and all this gives us a strong revenue growth potential for both years, fiscal year 21 as well as fiscal year 22.
Okay, and just one last one, if I may. So you mentioned from 23 to 25, you have visibility of 3 launches, and 25 onwards, you have visibility of 1 or 2. I missed that point. If you could just help me repeat that, please.
So what I have said that our pipeline is expected to deliver at least 3 additional molecules between fiscal year 23 and fiscal year 25. And also then for the coming years, we expect to launch 2 molecules per year.
2 molecules per year. Okay, lovely. And is there any update on the Sandoz deal, like, anything we can share? How are we progressed since we have crossed, fiscal 20 as a year, as a milestone? So anything you want to share?
When it comes to Sandoz, the development of our molecules are in very early stages, and what we have is according to plan.
Perfect. Great, and all the best.
Thank you. We take the next question from the line of Atishray Nalhan from Dawn Capital. Please go ahead.
Hi, good evening. Firstly, I'd like to commend you on the 10 Cents Mission initiative. I have 2 questions. The first one pertaining to the biosimilar insulin. Would you be able to provide a rough estimate of total insulin sales in FY20 and a sort of approximation of the geographic distribution?
For recombinant human insulin, our insulin franchise, we are not sharing the details on a product basis or across regions.
What about insulin analogs?
It's the same for the insulin analogs, that we are not providing specific data on a product basis.
Right. Okay. And the next question, could you provide some sort of comment on the uptake you're seeing in trastuzumab and pegfilgrastim when it comes to the outpatient formularies in the U.S.?
Paul, can you please take that question?
Sure. So when you talk about formularies, I think it's a little bit in oncology, it's a little bit different than a retail pharmacy product where the PBMs drive it. It's much more the insurance company coverage levels, and rather than PBM formularies, and they're less of a factor, but coverage levels are quite high. Really, they're the vast majority of payers are covering the product, and so coverage is good.
Right. Thanks a lot.
Thank you. Next question is from the line of Yatin Mohani from Aroha Investment. Please go ahead.
Hi, my question is on the biosimilar business. I think over the last couple of years, the market in US and Europe has evolved into a more competitive landscape with the innovators and other biosimilars adopting quite aggressive strategies, including exclusivity contracts. So just wanted to get your view on what gives us confidence to sort of achieve the $1 billion revenue target.
We are actually very confident to achieve the $1 billion revenue target. It has three important components. Our molecules in the United States, most of the world's market, where our biosimilar business also continue to do really, really well. We have also got many more registrations in the last year, for example, when it comes to trastuzumab, and we are now starting to commercialize this more and more. And also Europe is the third component. What's not factored in this 1 billion guideline given is China. Also, with our increased portfolio, as I've mentioned, also bevacizumab and Aspart, the fact that trastuzumab was just recently launched and that glargine is an upcoming launch in the United States, we remain very, very confident to cross the $1 billion line by end of fiscal year 2022.
So, thank you.
Thank you. Next question is from the line of Vishal from Nirmal Bang. Please go ahead.
Yeah, hi. Thanks for the opportunity. I have a question on the interchangeability status of Lantus. Can you guide whether this interchangeability status would only be for the vial or it would also be for the pen version?
The question is it for both vials and the pen, right?
Yes.
Okay. So, like I mentioned before, we are pursuing and discussing with the agency and on the interchangeability actively, and we will come back to you with once we have clarity.
Would any clinical trials be required, or you have done some basic trials and and on the basis of the same you are pursuing this interchangeability statement?
So late last year, the agency issued a guidance that talked about if the data package is analytical similarity package is strong enough, there may be provisions to entertain the discussions with the agency on interchangeability and biosimilarity. So that's exactly what we are doing.
And is there any chance the interchangeability status can come along with the Lantus approval that you are expecting anytime now? Or it's going to be a separate dialogue and it will take some time?
When we get clarity on that, we will provide you the same as well.
Thanks. That's all.
Do we have any more questions, Janice? Well, if there are no more questions, I would thank everybody for being.
I'm so sorry, sir. I just lost my connection for a minute. We have one last question from the line of Nitya Balasubramaniam from Stanford Bernstein. Please go ahead.
Hi. So very quick one. I just wanted to check on your Copaxone filing in the US. Have you responded to the queries from the FDA? What is the current status, and do you have any visibility on the launch timeline?
Yes, we have responded to the CRL on Copaxone to the FDA. The file is under review. We are going back and forth in terms of the information that the FDA is asking as in they review this our response. We have been assigned a new target action date, but at this stage it's pretty early to comment when we launch the product. The approval is on track because the FDA still has to review certain critical sections, and given the complexity of this drug, we rather cross that bridge or cross the milestone where we know that the approval is imminent. And at that point of time, we'll let you know.
Okay. Thank you.
Thank you. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to Mr. Saurabh Paliwal for his closing comments. Over to you, sir.
Thank you, Janice, and thank you, ladies and gentlemen, for joining us in today's call. If you have any further questions, do feel free to reach out to me. Have a lovely evening.
Thank you. Ladies and gentlemen, on behalf of Biocon Limited, we conclude today's conference. Thank you for joining. You may now disconnect your line.